And I want to switch gears here a little bit and just talk about the U.S. housing market as it stands right now. We've gotten recent data out, and a lot of it shows a pretty strong picture for the real estate industry. Heading into 2020, you say that we think 2020 is not the time for a bearish view on the U.S. housing market. Why is that?
And it's a great way from segue to financials and mortgages. If we were sitting here a year ago, a 30-year fixed rate mortgage was near 5%. Today, just looking, it's 3.7%. So that starts with demand side, affordability. That's creating opportunity for households shifting from very expensive rental apartments where when they have one or two children, they begin to need more space. There's a big secular change here too. So you got the low rates, and then we're seeing the move of entry-level homes. So the availability from home builders of smaller homes, but they have the open space, almost like where you were living in the apartment in a downtown area. It's becoming very attractive. The industry needs more units sold because the selling prices are lower. But housing looks really good for 2020.
What about the fact, though, that U.S. home prices are still high? I mean, historically, they are still high. They are pricing out some buyers. Do you expect that momentum to shift at all?
It's a great question. And looking at one of the benchmarks, which is the S&P Core Shiller Index, the rate of increases is very low now. It's about 2-3%. There's some markets 3 or 5 years ago that were up 15%. San Francisco, Seattle, they're now flat to down 2%. So fortunately on affordability, prices are still going up, but modestly. And that with affordability with mortgage rates is a pretty good picture on the demand side. The other factor here too is on supply, because when you look at the housing market, it's mostly existing homes. 5.2 million are in inventory today. In terms of new housing starts per year, it's about 1.2 million. So taking that supply, population growth is up 15% since the year 2000. So there is increasing demand, we think, because of the aging millennials who have higher income today and a need for moving to a home. And affordability is making ownership pretty attractive. So the bear case for this would be that we're late in the economic cycle. If we're investing in home builder stocks, it would be early cyclical, not late. But we think there's a secular growth story here. We like the builders that are well positioned for entry-level homes. Names like MDC, Meritage, and others.
Ken, how important, real quick, you mentioned the mortgage rate at 3.7%. How important is that for the U.S. housing market for that number to stay below 4%?
Well, kind of like a traffic light, I think we're in the green area between 3.7 to 4.2. The yellow, I think, is 4.2 to 4.5. Anywhere that we get in the upper 4% to 5%, it's going to be lights out and these stocks would probably go down. That's not our scenario for 2020.
All right, Ken Leon, thanks for joining me today.
Thank you.